Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Saleem, Daya, analyst with Nasdaq Corporate Solutions to discuss cannabis equities performance and the influence of retail interest. Saleem, it's great to see you again. Welcome back to Trade Talks.
Hi, Jill. It's good to be back.
All right. Cannabis equities as a group have recently outpaced the broader equity markets in Canada and the US, but the sector has also seen a pickup in volatility, particularly in February. Can you give us some color on this?
Yeah, absolutely. So a lot of that pickup in volatility has really been somewhat recent, and it's actually come on the back of increased retail participation within the broader markets, best embodied by the various other subreddits and social media platforms. The volatility that we would have observed in early February would have been very much relegated towards Canadian dual-listed players, particularly the likes of Aphria and Tilray, as that Reddit retail crowd attempted to essentially make an arbitrage play, given the company's announced merger back in December. Sundial Growers was also a pretty substantial target for that Reddit retail crowd as the stock was very hard hit during 2020. And it also saw a very sustained and substantial pickup in short interest, which, as we learned from our experience with GameStop, has been a focal point for that Reddit retail crowd. Now, looking at the weapon of choice here, options activity has been a very important weapon of choice for that Reddit retail investor. And that's because in cases of highly shorted stocks like cannabis players, that use of options across the retail crowd can actually prompt a very substantial and sustained short squeeze. So that was really kind of the weapon of choice here. And if we look at how that volatility played out and to really put this into perspective, Sundial Growers, for example, saw approximately 2.6 million options contracts traded on February 11th alone. This was followed by Tilray at close to around 1 million options contracts, and then Aphria at 300,000. And in historical terms, this is actually the most substantial options activity that we saw across all of these names. And even if we look at options activity across the broader cannabis space, it was very high in historical terms. And if we compare this relative to what we've seen in 2020, that volatility, that pickup in volatility that we saw in February, actually pushed the daily options activity average higher by a factor of 3 when compared to the daily options activity of 2020. So very substantial volatility.
How has that volatility played out when it comes to the performance of Canadian versus US players?
Yeah, that's a really good question. And, I think the simple answer here is divergence, right? Canadian players have outperformed their US counterparts by about 70% quarter to date, and that compares with a 58% gain for those US-based MSOs, that's multi-state operators. If we look historically, this actually wasn't really the case. MSOs tended to outperform their Canadian counterparts, but given the market volatility that we've seen recently and that elevated retail footprint, there's been a substantial departure from that historical trend. And that's despite no really meaningful change in fundamentals across the space, really underscoring the substantial and pronounced retail participation that we continue to see across the cannabis sector.
So it's quite clear that the retail footprint across the cannabis space continues to remain substantial. How has institutional interest continued to evolve?
Very, very good question here. So I think if we actually reflect on our Cannabis Pulse, our most recently released Cannabis Pulse, which covers institutional ownership changes as per 13F disclosure. So in this case, it'll be for Q4 20. We definitely see the markings of a pickup in institutional interest when we control for index players and broker-dealer activity. And this is particularly across those larger cap cannabis names. A lot of that institutional interest appears to be coming from hedge funds, but even then, if we control for that activity, we definitely see long-only asset managers kind of creep up the list. And this will include the likes of Federated Hermes, Contrarius, American Century Investments. And I think what this really indicates is it's a continued evolving of institutional interest across the space. And in terms of where that interest is concentrated, this has been a dominant theme throughout the discussions in the past, and that's very much tilted towards US-based exposure.
And Saleem, are there any vehicles you focus on specifically when it comes to tracking US exposure? How have these vehicles performed?
Yeah, there are. And one important piece of the puzzle here, one important vehicle that we track is the MSOs. That's the Advisor Shares Pure U.S. Cannabis ETF. It's essentially an actively managed ETF that focuses specifically on U.S.-based exposure. And in terms of how the ETF has performed, in terms of asset flows, it's really been explosive. The first quarter of 2021 alone has seen the ETF notch inflows of around $690 million. And to put that into perspective, the ETF MG, that's the Alternative Harvest Index ETF, saw inflows of around $240 million for all of the fourth quarter of 2020. So the MSO's inflows has outpaced the ETF MG's inflows this quarter so far by over a factor of 3. So US interest is massive, it's substantial, it continues to remain very pronounced.
And Saleem, in the last minute here, looking forward, what are some things you're keeping an eye on?
That's a $1 million question here. I think the first component is really going to be regulation. All eyes really remain squarely focused on the shape and scope that US regulation will take. I think the general consensus here is the full-scale legalization is likely not on the table, given what we know about the Democratic Party platform, with decriminalization being the most likely alternative. So here, the focus will really be on the capacity for those multi-state operators to uplist, because they're currently only listed on Canadian exchanges, to essentially uplist to US-based exchanges, which would substantially increase their access to capital markets, thereby increasing the institutional footprint across those names. The second, of course, is retail participation. We know since the COVID sell-off, retail participation within the broader markets has been substantial, with some research suggesting that retail players currently account for about a third of all the US equity trading. That research also suggests that retail players trading currently is either equivalent to or exceeds the total trading coming from mutual funds and hedge funds, second only to high frequency trading. And that retail footprint is even more substantial when it comes to participation across the cannabis space. And so with forthcoming stimulus checks essentially scheduled to hit the bank as early as the end of this month, that retail footprint is really going to be a piece of the puzzle that we watch very closely.
All right, Saleem, we appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks so much for having me.